Is Uber at $60 a long-term investment or an attractive trading opportunity? That's what I'm going to cover in this video. In doing so, I'm going to cover Uber's business model briefly, and I'll go over its financials to see whether it's actually cheap or not. And finally, I'll try to do a valuation or give my verdict. At $60 stock price, the market cap is $120 billion and the PE ratio is shown as 29, which is considered not too expensive, but it's based off of the net income of $4.4 billion. So is that really a legit number? Let me look into their financials a bit more deep into their income statement. If you notice, that $4.4 billion of net income includes close to $2.7 billion of gain on sale of investments and another 200 million on gain on sale of assets. Their operating income is shown on top. That's about $2.681 billion. So if your operating income is $2.6 billion, you pay tax and your net income should be less than that because Uber has more debt than cash. So usually your operating income is a reflection of your profitability. And once you reduce tax from it, you get your net income. So if I go over price over operating income, it's actually more than 50. So in reality, the price to earnings should be more than 50 as a minimum, but it's shown as 29 because of that one-time sale. So that's why I don't think Uber is cheap with respect to the PE ratio. Let's look at free cash flow. A lot of people are saying it's 20 times free cash flow. So let's look at their free cash flow for the past 12 months. That's about $6 billion. And based on a market cap of $126 billion, that's the price to free cash flow of 20, which is considered very cheap. But again, this number also includes those gain from sale of investments and assets. And also it includes a lot of stock-based compensation and a lot of other non-cash expenses. So this is not really a reflection of their profitability. So we cannot really apply a multiple to this and say that, okay, Uber is cheap, right? So I have not been a fan of Uber ever since it went to public. I've been tracking this company and they have not shown me any good numbers. Let me show you what I'm talking about. Since financial year of 2019, let's look at their margin profile, their operating margin especially. Look into the operating margin, it's mostly negative, and recently in financial year of 2023, it's about positive 3%, and that's not much. And when you look into their net profit margin, it's negative from 2019, 2020, 2021, 2022. And in 2023, it's about 5.06%, and that's not good. And when I look into their number of outstanding shares, look at the trend. In financial year 2019, they had 1.2 billion outstanding shares, and they kept on diluting the shareholders significantly. That means they are not able to make a consistent profit, and they are able to rely on dilution. They're diluting the shareholders and then using that cash and burn that in their operations. And that's what they have been doing from financial year 2019 to 2023. So you can say, what about 2024? Did they get their act together? And I'm going to show that right now. Even in 2024, the trend is quite similar. They're still continuing to dilute the shareholders, and their operating margin is still in single digits, and their profit margin is showing as high, but again, like I said in the past, it's misleading. And the free cash flow margin is also not a true reflection of their profitability. So overall, I don't think Uber has demonstrated to me that they can continuously give me a profit, and that makes me believe that this is not a long-term investment, and it could be a trade because Uber has a lot of hype. They do have revenue growth. Even though they're not able to get good margins, they're able to show a free cash flow and net income. So that makes people believe that this is a very profitable company that's printing cash, and that's going to give some hype whenever they report good earnings. Of course, the stock is down recently because of the Waymo fears. I don't think that's a big deal at the moment. I don't think that's an immediate threat. It's going to take some time for autonomous vehicles to come mainstream, and even if they come mainstream, they will only operate in cities, and also it'll be a mix, and Uber will eventually have that fleet on their app. In conclusion, I don't think autonomous vehicles are an immediate threat to Uber, and I don't think it's a long-term investment either, unless they demonstrate to me that they can consistently make good profit and I feel that it's a good trade because there's a lot of following for this company and a lot of people do not understand that they're not very profitable. People think they are printing money. So it's at $60 now. It could easily go to $80 if they give good earnings in the next quarter. And that's why it could be a trade. And I could also do an option like ending in June 2025. I can buy a $70 strike or an $80 strike. I could probably get a profit, but I would not bet on Uber. Personally, I will not touch Uber, but let me know your thoughts in the comments. Thank you so much for watching.